Today is Friday, February 2nd of 2024. We did multiple trades in our main option trading account as you see here. First, our risk reversal. So we bought to close the put option portion back. The $85 strike price expires in January of 26. And funded that or paid for that by selling the $200 call option. So we got a credit of $2.85 per share for doing this trade today. I'll show you where we're sitting now in just a second. And we also got a credit when we entered this risk reversal initially. So where we're at now is we own the 180 call that expires in January of 26, about 2 years from now. And we've now sold the $200 call. So now our max profit is the difference of that $20 per share. So we're out of our risk. We got closed out that $85 put option, so we're happy to do that. And now it's just a matter of how much profit we'll make. Will it be just what we collected in our credit when we initially entered it plus today, or will we be able to get some more on the 180 $200 spread that we own? All right, Costco, this is our iron condor we adjusted today. So kind of messed us up a little bit in that the strike price got adjusted down because of the $15 special dividend that Costco announced, but things happen. So we are adjusting it today to hopefully exit for a profit here. And so what we did is we bought to close the $700 call option, and we rolled that strike price up to the $20 call option. So we got it by $20. Now we also sold our protection, which is this one here, this 715 call option, and we bought the 750 call option. So we widened that gap. We increased our risk from the $15 there that we initially had sold to now $30 risk to the upside. And then what we also did in order to help fund this for a very small credit was we bought to close the $5.95 put option and sold the $6.95 put option. So let me kind of show you what's going on here so make sure you understand. I know it's a lot of legs on this position here. So we rolled our strike price up from the 700 because it was in the money. See, it's trading at 710. We got up to 720. So really liked we were able to do that. It's now out of the money. We got right at 2 weeks until this option expires with a possibility of being able to exit for a credit. We see it is supposed to announce earnings during the next expiration cycle. I don't think that's confirmed yet, but it is supposed to announce earnings. So definitely would like to be out of this if possible. Going through earnings next month in March. Now, $6.95 put that we sold. So originally we were down here at $5.95, and we had to roll all the way up to $6.95 in order to do this trade for a credit. So notice that that's right here at an area that served as support for it. Notice the support was right here. The low was $691.50. So that was the low yesterday, and really that low for the past several days. And also corresponds to the high going back here to January 22nd. That high was right at $698. So we got our put option kind of in that general area. And if Costco continues to go up and stays below our 720 strike, that'll be great. And as long as it stays above our 695 strike, then we'll also be good. So that's how we adjusted that iron condor that went against us so far. Next one's a new trade. We sold the ELV March 15th 470 put option, got $3.72 per share. I was trying to make this a spread, but we just couldn't get our protected put option filled for a reasonable amount, even if we went out of the money. So unfortunately, we just sold a cash care put option. I may try and do a put option to turn it into a spread in the future. So looking at our charts here, top right, we see the hourly chart. See this trading above the green 50 and red 200 moving average. We like that. Over here on the daily chart, we see it broke through this area right in here that has served as resistance for it. This $488, $489 area served as resistance there, kind of a general area there in October, then going back into July and August. It pushed through there a couple of days ago. We see nice buying pressure over the past week and a half, 2 weeks. We do see the big red down candle here. A gap down. It's now filled that gap. And then it had enough steam. The buyers just kept buying it up till it pushed through there. Now volume has been lower. And today, it looks like it's again finding resistance there. So just to give us some room, I decided to go ahead and sell this cash care put option down here. It's about 5% out of the money. So about $25 out of the money. And it's below the green 50 moving average. It's just above this red 200 moving average. And it's right around an area that served as support for it. Now support's actually at 460, so that's $10 lower, but it's in that general vicinity. So I like that. Now switching over here to our weekly chart, bottom right, we see that it's now kind of confirming that uptrend. We see a higher low here. We now see we've made a higher high here. So is it possible for it to come down? Well, it absolutely is possible. Anything's possible. But we do see a nice upward sloping trend forming here. It's kind of forming a bottom here, and this was an area that sort of support for it for quite a while, this 440 area. Now it's kind of broke out above this resistance area, so will it make the next push higher to try and test these highs back in here from 2022 and 2023? Well, we'll see. But that's what it looks like it wants to do. We see nice high volume last week, nice volume today, this week, but it did find resistance at the same high from last week. So just kind of keep in mind, you always want to make sure that you understand the risk on any trade you do. All right, MET, so we did a bullish put credit spread. We sold to open the March 15th $62.50 put and bought the 50 put for protection. Got 62 cents per share for doing that trade. All right, so big gap down after earnings. See the gap down, what was it? Around 5%. Found support yesterday around just above this red 200 moving average. Again today, we see it finding support there. We do see it's in a downtrend now on this hourly chart in the top right, but it's around this 200 moving average. We see we have some support going back here in December. We have some resistance back here in October. So an area that we expected to find support, especially around this moving average, this red 200 moving average. Now, the only negative here that I see on this chart is that we made a lower low, so that is a negative. But it doesn't concern me too much based on where the support levels is at and the moving averages it's now testing. But we do see that there was high volume, pretty high volume on the 31st and high volume yesterday. Part of that was just buyers and sellers figuring out where they wanted the stock to be at. So that's been figured out today. Again, we see higher than usual volume, but the candlestick, including the legs, were almost inside the one yesterday. So that means it's kind of consolidating. Now over on our weekly chart, we see that it's in a nice uptrend. See, it's made a higher high there, made a higher low here. So the question is, where will this new low be? Well, if it finds it at this green 50 moving average, which appears to be trying to serve as support, then we're still good. Our $62.50 put options below that. So this is a position we can add to, and we will if given the opportunity to do that. All right, KLAC, position we've been in for a while, is a poor man's cover call. Also been selling some put options against it, and just didn't see a whole lot of room to keep working this, as well as our option is less than a year out, so it's either time to either roll this option or just go ahead and close the position out. I decided to go ahead and close it out. So we bought to close the March 15th 460 put. We also bought to close the near-term call option, the March 15th $400 call, and we sold what was our leaps call option, the January 17th 330 call, pocketed $82 to close this out. And not a whole lot to talk about, except that we are at a spot that I wouldn't mind doing a trade in. It's gone up so much, so fast. I believe the valuation is pretty high up there. See that over the past, let's say, year and a half, it's up 127%. And I'd like to see it come down here to the lower part of this upward sloping trading channel in this 520 area. If it got down there, kind of close to this red 200 moving average, I'd definitely be interested in entering a new trade in it. But right now, I just decided, we're at the upper part of this trading channel, this long-term trading channel, although it did make a higher low here. But I decided, it's just time to kind of get out and let's just reassess instead of rolling that long leaps call option out. All right, then our final trade, Starbucks. We just bought to close this. It's only worth 8 cents per share, the SBUX February 16th $85 put option. And it cost us 8 cents per share. I'm definitely willing to go back into Starbucks. But and it is that area that I thought about doing it, but I'd rather be at the $85 area. The $90 area just wasn't really paying much. So that's why I decided to just hold off for now. We'll kind of see if we have another opportunity to go back into Starbucks. All right, so that's our trades for this week. I hope you have a great weekend.